Hello dear traders, let's discuss the results of the last trading week on Wall Street and try to figure out what could happen this week. The US stock market closed on Friday and opened today on an optimistic note. Wall Street indexes are trading with a modest gain, so is the US dollar index. The market is anticipating new talks between Russia and Ukraine. The major stock indexes closed with modest gains on Friday. The Dow Jones closed 0.4% up, the Nasdaq edged up 0.2%, the S&P500 added 0.5%, and despite minor growth, the New York pre-market suggested a further advance. The S&P500 rebounded to the levels of October 2021, consolidating below resistance at 4,500. The expected corridor for the index is defined between 4,510 and 4,580 points. Despite serious global headwinds, the main culprit linked to geopolitical tensions is ebbing away. The situation in Ukraine remains the same for a couple of weeks straight. New sanctions slapped by the West do not arouse concerns, and Russian and Ukrainian delegates are due to meet in Turkey on March 28 and 30. Market participants do not pin hopes on a breakthrough. Nevertheless, further talks diffuse jitters between the states and give hope for some diplomatic solutions. Besides, investors are focused on hawkish signals from the US Fed. As a result, the bond market is trading under high volatility. Yields of 10-year treasuries climbed to the highest levels since May 2019. The economic calendar reminds us about reports on US inflation, PCE prices, and the labor market. Based on this data, investors will try to predict further Fed's moves. The US dollar index jumped 0.4% to 99.20, the peak of the last 2 years, and the greenback strength is supported by expectations of aggressive monetary tightening. Amid growing demand for the US dollar, its index is expected to trade between 98.80 and 99.40. Goldman Sachs and Bank of America released their surveys, raising expectations of 2 rate hikes by 50 basis points at the 2 common policy meetings. The recent report on producer prices is precursor of a new multi-decade peaks in consumer inflation in the nearest months. The US dollar is asserting strength because traders are speculating on rate hikes at each of the remaining meetings by the year's end. The greenbacks index is likely to test the mark of 100, though a lot will depend on macroeconomic data which is due this week. The USD CAD pair skidded to 1.25 and the lowest high in the last 2 months. The Canadian dollar is propped up by the interest rate increase in Canada, a rally in the oil market, and improving risk appetite amid waning geopolitical tensions. In this context, the USD CAD pair is expected to trade in the corridor between 1.24 and 1.26. Though the currency pair is trading lower, the US dollar could take the lead as a safe haven asset, so the loonie might lose ground. Oil prices are viewed by market participants as a tool to step up political pressure. In addition, the lockdown in Shanghai has also affected oil prices that might take the shine off the Canadian dollar. Hence, the USD CAD pair could reverse upwards. Bitcoin perked up over the weekend. The flagship cryptocurrency is trading today at near $47,105 with a bullish outlook. Bitcoin has gained 5.6%. Since Friday, and moreover, the digital token has jumped 13.2% in the last week. The dynamic of the last 14 days suggested that an uptrend could be underway. Buying activity and volatility in the crypto market has increased. Eventually, Bitcoin escaped from a wide range between $32,000 and $45,700. The crypto is projected to move higher in the corridor between $47,000 and $48,000, and today analysts will be able to judge whether the bullish trend is strong enough. To sum up, the main market catalysts are speculations on further Fed's moves and the talks between Russia and Ukraine and Turkey. Despite cautious optimism on Wall Street, it's too early to speak about the obvious bullish momentum. Experts warn of a higher volatility this week on the back of the macroeconomic reports and geopolitical tensions. Good luck in trading and see you tomorrow.